technology since I know myself. I'm Portuguese. I started my at a young age at airbase with my father, working with airplanes and technology related to it. Then I got a computer quite young. In Lisbon, I studied economics and management, always with information systems around it. And at the university that I studied, I started by managing the computer department. From there, I went out of the country with already some 12 years of working there and lecturing at the university and managing the computer department to Germany, where I did some business intelligence and competitive intelligence, which was really fun because it was still at the beginning. This was 2012, the beginning of the whole craziness. And then I got an offer to go to the Middle East, to Abu Dhabi, where I did some national security and some cybersecurity. That was also a fun period, and counter extreme violence research. Came back to Europe, to the banking and fintech area. Again, I caught it up in a good wave at the beginning, where I had previously worked a little bit with blockchains in Abu Dhabi, but I caught up the idea and the whole fintech hype around algorithms and robo-advisory in Germany. In one project that I had here in the Netherlands, I got invited to move to the Netherlands. My wife also had her professional life moving up here. Where I started, well, I continued with advising fintech and banking, but I started more in the core banking system, core banking systems, and I took a little bit to the next level, the whole online influencer and the whole SOT leadership effort. So it's been technology all the time, around all the areas and business. It's been a nice ride so far. And I'm lucky because fintech and banking is actually one of those areas where you can actually see new stuff happening every day. Pretty much that.
Well done. Thank you very much. Who wants to go next? Okay, feel free to unmute yourself. That's fine.
Good evening.
Okay. Hi.
Hello.
Hello.
So let's get set up here.
You're a bit, okay, very good.
Hey.
You're a bit low, Jan.
Am I?
Speak a little bit higher.
But we do love your background.
Yeah. He's been in Aruba, I know that.
Looks like a sunny day. All right, so Bruno, you want to go ahead and start your presentation about fintech innovation, how innovation can help banks to survive the moment that we are all living on, and then we open to Q&A.
I can add that Jan is also an ex-colleague that I invited, and he's super knowledgeable, and I'm pretty sure he's going to add a lot to the. As long as he doesn't contradict me, that's fine. So Jan, no, I'm kidding.
Yeah, no pressure again.
Yeah, no pressure at all, right? Okay, let's start. Let's see if Murphy doesn't attack me. I should be starting to share, and okay, this was a nice demo that I had to start. Let's go to the real stuff. You can see my presentation and not my Zoom video where I see you guys, right?
Yes, we can.
Okay, just to double check. So as I said, I'm especially work as an advisor on fintech and banking and innovation. I lecture at the University of Lisbon where I get invited once in a while. I do have my own projects as an entrepreneur, and I like to be a speaker around these areas and try to convince people that I can look into the future. For today, what we're going to talk about is something which is quite interesting because in a way I've been talking a little bit about how you need to navigate around the whole craziness in banking and fintech, and you keep getting kind of shockwaves with technology, with changes in the industry, changes in the whole society, and apparently with COVID, the things just got a little bit up the notch, and you're going to take a look at it in some slides up ahead. But just to let you know, the whole idea is that COVID is only another wave. It's going to be a downturn. I'm pretty sure we're going to navigate out of it. We just need to try to get some bearings and try to get some ideas on how to do it. Let's go to the facts. The world has changed. It had been changing at a certain speed. I still remember 10, 15 years ago, I would play Monopoly with normal paper money. And I think 5 years ago, I found out that Monopoly had like a debit card with a POS. And I'm pretty sure that my daughter or something like that probably is gonna not look at the POS and the debit card and was gonna ask to pay with the phone or something like that, even although it's a game. So it's quite easy, and it was relatively quite easy. And the conversations that I had with Jan, for example, that comes from the banking industry, it was quite easy to see 3 years, 4 years plans, strategy that a big bank or incumbent bank would think about how things would go at a certain time range. So it's kind of like navigating in a nice sailboat that you plan everything, you know the weather, and you just go out with your family. It's all relatively quite and well as long as you know how to navigate. Things go a little bit different when the whole industry changes, and fintech is more or less like that. So it's kind of like this slide. So it's hard to read, it's hard to understand what's going on, it's hard to know where the waves are coming, but you still need to navigate through to get home or to get where you expect it to go in the beginning. And it's the same with banks. Banks still have to do their business, but all of a sudden there was the financial crisis. All of a sudden there was a change in the consumer behavior, a change in the whole society. And even if that was not enough, banks are now getting a punch with another wave with COVID. So if for the past 10 years, I would say banks need to adapt, need to take do that digital leap, need to change the way they work. And most of the banks actually were sensitive to that. They just started with some speed or with their own way of working. For the last 4 months, it's kind of like things just got crazier, because to add to all those challenges, we have now the need to push it to a top notch. And even for us that are always looking at it online and always looking at Twitters and always looking at the posting about it, it went a little bit sideways. So the banking industry had been changing, and the internal departments of a bank are now complete new industries. It's impressive how you can say, for example, you can see, for example, in the pay tech industry that it's sometimes bigger than the majority of the banks in a whole region. If that was not enough, you have around 12,000 fintechs to compete against banks. Banks had to try to adjust to that. There's the regulation, there's the human behavior, that's all that. And we had kind of like a big tornado now, and that's where we're going to focus in this session, which is you get hit by an extra tornado to that storm, which is a health crisis, an economic crisis that has a macro impact, and you will probably need the best of your competitive intelligence to try to realize what's going to happen in the industry. You have to reach out for all of us, influencers, people in the industry that are trying to study about this, or at least do some research. And you have to think about your business continuity. You have to refresh it completely because things just shifted. Your clients are going to be affected. Your funding is going to be affected. Your partners are going to be affected. It's a whole craziness. And I'm not going to go each one of these other guys. You guys will sleep over this presentation, but just to point out that there's internal human behavior that's being affected. There's technology behavior that's going to be affected, processes behavior that are being affected. So you were already trying to adapt to this first craziness of the fintech, and now you get hit with an extra challenge that puts your even legacy system up to be challenged if it can actually continue to work. I can give you a nice example that I was talking with my brother that is a bank manager, and he was just telling me this week how hard it is for him, although his bank is one of the most advanced in digitalization in Portugal. how hard it is for him to actually pick up all the phone calls, because the majority of his clients still want a phone call and a voice call directly to him, and they don't go for the apps, they don't go for the emails, they don't collaborate with that. So it is a huge external and internal impact that we're having. And unless you already have a super special state-of-the-art cruise that an innovation ready, I don't know anyone that has it, but unless you have it, then that guy that used to be on your fintech, on your bank, that was annoying like me, talking about all these innovation things, all these things and ways to work that the company needed to be adjusted. Well, that guy now is probably one of your best friends to try to guide you into something else. So what have I been telling most of my professional friends and my clients in a generic way, because it's pretty much impossible for a single person to try to advise in everything. Well, one of the first things is that if you haven't gone phygital, and phygital means the combination of digital and physical in your offering, so to create that unique experience with your client, then now it's the time, and you can't wait any more longer. If you haven't gone agile yet, well, again, now it's the time that you actually have to go agile, and you have to go agile already in a more digital way. I know that the majority of people here probably know this even better than I do. Go safe here means go safe in regulatory terms, and go safe in cybersecurity terms, and last and not least, go open. You really need to open your fintech and your bank to collaborate with other partners and other fintechs that are best in breed in something that you're not. And this is the time that you can't go to respond to everything, to every corner. But you can't stay alone, although there's the confinement and the social distancing that doesn't apply for companies per se. So let's just go very quickly about some of the most important. Being phygital. It's way beyond the digital thing, the digital approach. Digital is already passed on. We actually need to go beyond just the digital experience to a phygital experience. That means to do the best of the big techs, the Amazons and the Facebooks and the Apples and the Ants of this world, do their best approach for the client, understand the client like they do, but at the same time provide the best of the basics of financial and banking services, which is advisory. People do need advice. People do need that closeness to their advisor and for somebody to take care of their money. And at this moment, that part is in jeopardy. Interesting that one of the biggest trends is actually advisory platforms. To achieve that, and you don't have the time for the typical waterfall approach. And we can talk about it after this quick presentation, this quick warming up. But you need a real agile approach, and we don't see it. What we see is a lot of companies looking at agile like a hype that if they put on their website is a nice marketing word, but they don't know how to work. They keep on the work hard from anywhere approach, when you actually, what you want is a work smart from anywhere. And the work hard from anywhere was expected that somebody would sit down and from 9 to midnight doing some Excel forms and then on Monday deliver them. Now with the COVID-19 effect, that doesn't work. So we really need to go agile, but in a real way. Jan can also testify some of the talks that we had about how some frameworks and some ways of working are actually not quite well understood. The human factor, things that were not okay up so far because you didn't have that approach, now are even harder. We have to take a lot of pay a lot of attention now, because some people got used to working inside a building for years, and the actual way of working in some banks, especially on banks, was in the building. When you got out of the building and you went home, there's a whole mess. There's like the undefined borders between your family and work. There's a huge anxiety because you just left your comfort space on your tall building and the skyscraper, and now you work from home where you probably don't want to show some stuff, or you feel that you're being your privacy is being invaded. And there's an interesting characteristic that we also may talk about a little bit, which is the coming back. There are companies deciding that the comeback should be done in waves. and that has a huge impact on people's expectations. What happens if you're not on the first wave? Does that mean that you're less important than the others? What happens if you don't come on the second wave? What does that mean? And if you come back, the Deutsche Bank, for example, just said today, oh, we've been cutting costs, and that's interesting that we've been doing so. So we're going to take a look at how we have been cutting those costs and probably continue it. If I would hear that from my boss, I would say, like, well, what does that mean? You didn't call me for the first week to come back, and now we're talking about cutting costs. What does that exactly entail for me? So there's a lot of human factors to not only on the way of working remotely, but also on the way that we can take care of this uncertainty to get back. And at the very end of all this, becoming agile, being safe, investing in cybersecurity, because now things are going to be more remotely than ever, going cloud, because you can't just continue to have a computer department taking care of your huge servers on premises. This whole beyond digital, more human, more cognitive, know your customer, react to it, mixed with this new way of working that had to be implemented in weeks, actually explains that if you don't have an open mind to be innovative, if you don't have an open mind to connect, you might really put in jeopardy even the future of your bank, fintech, and your company. And I would stop with the slides for now, and maybe we can get back to the coffee mode.
Well done, and thanks for sharing, Bruno. I think we can open to Q&A questions, and let's discuss as a tribe, as a team. So who wants to ask a question or just say something? Hi, all.
Can I make a comment?
Yes.
Yeah.
A good one.
Yeah. Okay. Maybe some of my context and background. I am working in the banking industry in the Netherlands now for near 25 years, in all kinds of capacities, but the last, say, 10, 15 years for banks and with banks. Currently working in a in one of the biggest software vendors in the banking industry. And we have had this exact conversation just yesterday. That is the interesting part internally. And one of the things that Bruno does not mention, and that we see, is that banks actually will probably switch into a mode where they will automate more knowledge than they were doing before. And we've seen a big shift in administrative industry already for the last 10 or 15 years, where the, let's say, lower educated roles are being laid off. So you see less bank offices, you see less people behind the counter. It's more, let's say, the highly educated workforce that is in service of the bank and helping the bank and doing their processes, etc., etc. What you will see now, at least that is the thinking that we have on our side, is that banks will start automating the more intelligent work as well. So think of people onboarding new clients. Think of doing loan or mortgage requests of people. That can be automated by using, let's say, knowledge models. Call it explainable AI or whatever you want to call it, and that change will actually facilitate the thing that Bruno mentioned as in his last sentence, where the bank is saying, like the Deutsche Bank, like, oh yeah, we're looking at cost cuts, and also we're looking at possibilities to well, let's say, reduce our complexity and being less dependent on those people with all those distributed attention. You want to make sure that the distributed attention of your employee is actually going to things that are important and things that cannot be automated.
You probably agree with me, Jan. We went from that cognitive digital approach where, for example, if I'm asking for a loan, I don't want the bank to ask me again for the documentation because the bank should know me. So like Amazon knows me. And that's like the last 5 years we've been telling banks, goes after that. So go after a client, don't ask him again to get this pay slip in or something, you already know him. So facilitate the credit. And it's interesting what you just mentioned, and because after the retail client now came the corporate, right? So with COVID-19 now it's like corporates asking for to being helped with funding. And now it's the time to go beyond those 2 weeks of delivering my startup documentation, my balance sheet that I don't want to, and sometimes banks ask me more documentation than the government. And that AI, that knowledge, that cognitive intelligence, though, that assisted machine learning, now is the time that it can be put it into practice for risk. So yeah, I totally agree with you.
Yeah.
If I'm allowed to jump in terms of banking, you need to pay attention to the regulation. It's one of the industries with more regulation. I don't work now in the banking industry, but I worked already on the past, and there is a very big pressure from the regulatory machine that sometimes doesn't allow them to do better or to perform better because of that. So the regulator needs to do their paper too in order to make the things easy. And you have the example of Revolut. Revolut doesn't have the same rules that the bankings need to follow, and Revolut plays with the APIs from the banks and makes the business from the APIs of the banks. So just to bring a little bit of discussion, if I'm wrong, someone will correct me for sure.
You're absolutely right. So let me start with the most recent stuff. So the European Central Bank and the European Commission has actually give kind of like 6 months of easiness. There's a whole presentation on it with that we could go over. So they eased up the life for banks in reporting, delivering, and regulatory demands. So for now, short term, there's something. Although banks are asking, okay, you're easing up six months, but I still have to report it by the end of the year, and I don't know what's the effect of the COVID-19. For number 26. It's also interesting, and we mentioned that a lot of times that's always a coming topic. It's completely different if ABN AMRO wants to open a branch in Portugal. ABN AMRO brings a group of offering, of service offering, which it has no comparison with number 26. Number 26 has a limited number of services, and if ABN AMRO opens an office in Portugal, the network connection, the amount of connections that the bank has in Asia, in all over the continent and the world, it's huge. So you're right, it's completely different from one to another, but the servicing is also different. Regulators now seem to be a little bit more open to it, but they still lack one important thing. They're still not able to keep up the pace of innovation, not even the bank innovation, much less the fintech's innovation. So it's always going to be a cat and a mouse race. I remember that I had troubles in Germany with the regulator because the robo-advisory practitioners, companies, were way ahead of the regulator, so we had to wait for another. A positive remark here in the Netherlands, the regulator actually makes a huge effort to try to keep up the pace. They actually do a lot of events with fintechs and try to keep up the pace the best they can. But I don't think it's the same around Europe, as long as I hear it. But it's a good point, Sil. And I can also yeah, go ahead.
Thank you, Bruno. Thank you for the clarification, Bruno.
Yeah, Ugo, if you want, I can continue to pick up some stuff that might incite the debate. So what I'm witnessing now is that the whole difference between the way of working in a company, agile, non-agile, Scrum, waterfall, is being really put to the test these days. And the way you see it is the fatigue in your colleagues. That's one of the most interesting thing that I see with colleagues in my company and colleagues outside my company. The reaction time, the fact that you can't work at regular hours because you have your kids at home, but you want to deliver by the date, it's by the end of the sprint or something, is completely different from somebody that says every Tuesday at 9 a.m. you have a meeting. Well, I can't tell my toddler, well, look, shut up at 9 a.m. I'm sorry, I know that you're 1 year and a half, but you're going to shut up now, or put him somewhere. Just because I have a meeting. That doesn't work, or I have to finish my my report by the end of the day, but I don't have where to put it. And we're talking about somebody like me that has not been really infected with COVID-19. Let's imagine that me, my wife, and my kids or something were infected, where I get to the extreme situation that probably I couldn't even put out my garbage because I would infect the whole building. how would I cope with that? What would that be what impact would that bring me in my company if my company is not, let's say, agile enough to cope with these situations? Because at the very end of the day, we know business is in the business, and either being a fintech or being a bank, they do need to at the end of the year to deliver something. So one of the things I've been telling everyone is the whole outlook, and it's in the presentation, the whole balance sheet outlook, the whole results outlook that you were thinking for this year should really be revised, and most probably be revised with also regulators, governments to not to expect, not even near the same results. Otherwise, this will go from a health crisis through a financial and economic crisis to actually a value crisis. I don't know if you guys have any comment on that.
I think you cannot. I think we will see a lot of serious economic crisis coming in the coming period, and I think people might be optimistic about it, but wait for the Q2 business results, then we'll know if it will be really bad or not. But anyway, I mean, about not being gloomy and doomy, what you are saying about agile, I think it's a valid point. At the same time, way that organizations have been looking at agile is mainly aimed at how they change at the moment or up until now. And what you are saying is actually a different kind of agile. It's the agility that you will need as an organization. And then it doesn't matter if you're a bank or not, but the agility that you need as an organization if your people start dropping out. And it's much more in the lines of like business continuity and stuff like that. And there I think there's still a lot of explorable territory.
Yeah,
because what do we do? Do we need 2 Brunos in case you get COVID?
It's more yeah, good point. But it's more in the likes of I noticed in a lot of connections, I noticed a huge increase of micromanagement, a huge increase of not being agile enough to understand that you don't need to tap on my shoulder every 5 hours to see if I'm working from home. So I even experienced, I'm a manager, and I even experienced being requested if I could do a bi-daily meeting with my team, and I said, it's not going to work. It's going to be impossible because I already have like too many meetings during the day. If I add another meeting, I don't see the point of it. If you can't, if you don't trust in between commas enough your colleagues and your team to deliver, what are you expecting? And then gets all the did your team finish up the hour registering? Did your team finish up the forecasting? The way of talking, and you're right, it's business continuity, but at the same time is this psychological approach that leads me to believe that all these recent times when we hear that entity A or entity B wanted to go agile and Scrum and whatever, it sounded more like a commercial marketing approach than an actual state of mind. And just like you, Jan, I do work with people that most of them came from the banking industry. So most of them do come from huge corporates that are used to, I don't know, planning details, 5 PowerPoints to explain the reasoning. I lost count on the number of meetings I have per day, and actually, it's interesting. I think I get more meetings now that I'm not behind a whiteboard at home, that I take more time to explain something, that if I was in a room with a whiteboard and I was explaining something and get 3 people in, now I actually have to call him, see if he's available, see if he responds, stuff like that. It's really interesting.
That's really true. I have one example, and then I'll shut up because I'm taking too much of this meeting. But I have a very nice example of a potential client of my current employer, where we were in an RFP or are in an RFP procedure. And one of the things in their RFP procedures, they say, we want this project or this implementation to be agile. Okay, then you think, okay, we do agile. And then 2 lines further in the RFP, what is it, requirement sheet? They come up and say, okay, can you please give me an estimation of all the work that you're going to do? And on top of that, can you give me a detailed sprint-wise plan and what deliverables you will be delivering in each sprint? And then I'm thinking, okay, someone has not understood the concept of agile completely.
Sorry, Jan, there's a quote from the Aliens movie that I love when the guy says, I don't know if you've been keeping up with the current events, but we just had our tushies kicked. Like, hello, have you been around? Yeah, that's true.
Hi guys, Smriti over here. I actually don't have a lot of background in banking, but I have a lot of background in telco, and I think there's a lot of kind of definition, and I can totally relate to everything we're talking about. In large telco organizations, it's also very waterfall, but agile is the new buzzword, and I feel like I'm going towards the direction where a lot of it is fake agile. Like you're trying to be agile, but things are still waterfall, and the entire financial process is still waterfall. But Bruno, what are your thoughts around due to this like new kind of situation? Do you think people, because going agile basically means sometimes a very large business transformation project, which can take years to implement because you have to clean up all your legacy systems. Yeah. So it is a massive cost, but it's definitely a cost worth investing, because in the future, then you can actually, have your platforms digital, you can have an Atlassian suite, you can have more transparency in the way you're working. So do you think businesses are going to go more towards investing business transformation programs than ever before, or are they still afraid of the costs that they incur?
It's a great question. I do believe that what's going to happen is they're going to try to fix it with technology first. They're going to try to say, can we go cloud, and does that solve my problems in the next 5 months or 6 months? So I already see the tendency in the areas that I work. So I work with the cloud banking platform, and usually the approach on solutions was different. It was more like, oh, what can your product do for us, and so on and so forth. Ever since the pandemic spread out, the approach is like, oh, now we're faced with the challenge that we need to work remotely. We need to reach our clients remotely. I think on-premises doesn't solve it, and I heard that cloud can actually solve that. So I'm imagining that, yes, a first approach will be technological, and there will be at least a tryout to get a more agile, more automated innovation on that area for a couple of months. As in economy, and because we're all human beings, I expect if depending on the speed of the economy and depending on the speed of the recovery, you're going to see the transition between technology to human. Usually the human, and you put it out super well, humans are perceived as more costly, so that takes always a second line in the adoption. And we have a lot of psychological HR challenges to cover in the next months, because I do believe that there's a lot of investments being done at this moment. We're happy that we had some companies releasing free meetings on Zoom or something, or free meetings or free software, but not all of them are free. So there's a lot of investments happening at this moment, and I'm pretty sure that a lot of CFOs want to keep those investments with some kind of return. So they're probably going to try to answer with technology. At least that's my feeling.
I think what's interesting is, before you said agile is almost a mentality, right? Yeah. Otherwise, you wouldn't necessarily need more meetings. You have kind of set up ceremonies to conduct your work of flow a lot more efficiently. So it is the human approach actually that we need, the training, the investment, not just a technology change, which is going to take time.
Yeah, I truly believe that investors and funding don't have an agile thinking per nature. They still think on the other way, and that influences the whole chain. If it starts at the top of the balance scorecard that your investors want, as Jan was saying, forecasting numbers, how many, when, how much, you feel pressure to answer that on the top of your company. You might have the best intentions, and that's what I meant with, at the end of the pandemic, I really hope that the value system of companies and persons somehow stays preserved, and that's going to be super hard, because you're going to be put it to the test. So what I'm trying to tell well, my brother in this profession, my friends and my clients and everyone and partners, is that, okay, now is the time to put your money where your mouth was a couple of months ago. If you had that innovation guy that you kept thinking, yeah, that's a good idea, but we don't have the time for that now, maybe we put it later. Oh, that's going cloud, that seems interesting, but I just invested in an on-premises software, maybe not now, maybe next year. Well, and I usually have a lot of those talks with Hugo, a person that I talk a lot when on funneling clients and funneling innovation through clients, and the whole supply management of fintechs or partners that you might go in telco. You do a lot of that also. I truly believe that this is also, unfortunately, a great opportunity to actually sit down and talk about it. If you don't have an innovation department in your company, maybe this is now the time. If you don't have an innovation officer, maybe now this is the time. And the time means investment in a way of thinking that you can innovate, and you can actually partner with people that are and companies that can actually help you do your business in a better way. And just not to forget Amazon and Google and Facebook and financials and other big techs, they do that. I was just this week reading something and exposing something in the internet about how we all thought that Amazon and Google probably wanted to build their own bank and they would conquer the whole market. But now the signals are completely wrong. The signals are, no, they just want to make money. And it's obvious, makes sense. They might do the bank, but for now, they're just more interested in selling the technology and selling the possibility for banks and they're making a huge amount of money with it. Instead of being a competitor, they're actually part of the value chain. And it's interesting because they are so big, but they still have that flexibility and that mentality that some of the companies that we work with don't have.
Yeah, I agree. I actually work in a consulting company and we're a systems integrator. So we tend to talk a lot about technology change, but actually I think we need to talk a little bit more about service design and design thinking and supporting our clients. And actually now you have time, take a step back. Is it, the telcos have so much retail space that are just closed right now. Is there a way of pivoting that retail space into something else? These are the kind of conversations that I think we should be supporting, kind of these kind of old school industries which are not used to asking themselves new questions.
When I left Portugal as an immigrant, I was in Abu Dhabi, I was in Germany, I'm here in the Netherlands. I do have contact with a lot of people around the world. One of the first things that I found odd, to say the least, was Zalando, that people actually were buying shoes online without even looking at them and testing it, which for me and the person that all my life tested out shoes physically, and I saw my wife testing out the shoes also, it's almost unbearable. I could not imagine myself ordering a shoe and wait, I don't know, 3-4 days for it, testing it at home, go to the post office or something to send it back. I'm like, that doesn't make sense. And in a way, it's what you're saying. It's like, I never gave myself time to stop and say, why is this successful? Why do people in Northern Europe actually chose for this? There's got to be a reason. And interestingly, my online habits in my house have completely, not to say give a 180 turn ever since then. And you're right, the whole brick and mortar approach, where you have a branch and where you have somewhere to sit down and talk, I don't think it's going to die completely, but it will be usually affected. I think advisory in banking, fintechs, and most of these things is the core business. You want people that actually can take good care of your money, and that's why number 26, for example, Marco. I always do there's a common question that we do when we speak about neobanks and incumbent banks. If you had just make $1 million, would you put it in number 26 or in your ABN AMRO, Rabobank, for Portugal, Millennium BCP? Most probably you're inclined to put in your incumbent bank because there's this huge legacy that comes with it and you feel safer for some reason with them. And advisory comes with that. This whole COVID-19 is pushing the online only digital bank forward, but I'm not, at least today, I don't think it's going to be an online only. It will be more and more an online if possible. So I imagine that the clients that my brother has with 60, 70, 80 years old, that they don't know how to open an app, they want to talk with my brother on the phone. I don't think our generation will do the same, but we probably still want somewhere that we can go knock if there's a problem with our mortgage or if there's a problem with our money. And I would feel totally unsafe if somebody would answer me, yeah, we have a Skype chat system that you can call, if you have any problems with your mortgage and you just lost $40,000, yeah, just call the Skype and we'll pick you up. And I personally would still not feel comfortable.
Do you think it's an age thing, or do you think it's a culture thing? Because I've also lived in a few countries. I've lived in Italy, where, you know, as we know, it's an kind of aging population and there's still a lot prepaid. So they actually go to the stores to top up their phones on a regular basis. And I've also lived in Netherlands, where Jan, you're from, and, you know, ING was the first bank that went digital only. So I think I've always had this kind of at the back of my mind that the more there's sun, the more people like to go out.
True. It is true.
The digital works better. I don't know what you think.
you touch an important an amazing point. There's articles this week telling something about the nightmare that will be for Germany for the next months to try to go digital. There's like articles everywhere talking about it. I don't know numbers per head, but something like 33% of the population already talked about, oh my God, I don't want to use money, but Germany is money based. And it's interesting because it's 8 and an 80, so a huge difference between the Netherlands and Germany, although they're neighbor countries. If you cross the border, they won't. Most of the places just accept German debit card, and visas and other cards might have some difficulty to be used. So you have to actually take money out in the Netherlands, which is, Jan can actually testify for that, is not common anymore. They actually have a unified ATM for all the banks because people just don't take money anymore. And you go to Germany, it's all about fiduciary money. The reasons that I keep getting, although it is culture at the end, is that Germans are extremely, and sorry if there's any German here, if I'm wrong, well, bear with me. Apparently Germans are very tax sensitive.
There is one. Be careful,
Okay.
Bruno.
Please correct me, Marta. Germans are very tax sensitive. If they feel like if they can, if online payments or something else will affect their financial image towards anything, they will probably feel less comfortable to use it. I had a friend from Munich, and I didn't even understand half of the ways that he had to work with around money and tax declaration, because he said it would affect literally everything. But you're right. In Abu Dhabi, for example, money and payments, it was all over the place, one or another. Yeah, Portugal is still, it's very digital for online things, but very money-wise, because we have the cafes tradition and the small espresso, so nobody is still used to pay 30, 40, 50 cents with a debit card. In a way, I'm happy, because otherwise they would raise the price for €1 or €2, and I hope that espresso doesn't go that way. But I know, Jan, maybe you have another idea, or Marta, I don't know.
I was just going to talk about India, actually, which is an interesting example with the demonetization that they went through, because it was a very, very cash-driven society. And then, you know, when the demonetization happened, I think around 2 years ago, now India is full on digital, like, you know, Flipkart, you've got all these e-commerce websites that are working really well. And I think everything is just shifted to digital really smoothly, because everyone at least had a card at home, which they didn't before.
Now imagine, just to poke you there, and then to keep, imagine you're now the manager of a mid-sized bank. You saw COVID, you know what you know. This is the time where you sit down and you ask your counselors, how can we go there? And that's what Jan said. Your counselor would come back to say, okay, we can think about going digital, as I like to call it. How much would it cost? How much would it take? Can we do a plan around it? And Jan, you can help me out here and tell your impression. And you probably would go nuts saying, I don't have time for that. I really need to grab the market now, because each week is I'm losing.
But what you also should realize is that if a bank goes takes the step to do a core banking implementation, and I'm talking about a reasonable size bank, then you're talking an investment of round about between the 5 and the 10 million euros. And it's a project usually takes about 2 years minimum. So we can say anything, and then you do the agile approach. Okay, sure, yeah. What do you have in 2 weeks? Nothing, or well, nothing. You have a little bit of business value, but well, as compared to the end result, you have nothing. So I think yes, the financial world needs to be more agile, but they've known that for a long time already, and they have been moving there. And a lot of the banks that we know either have spin-offs, and I think a very good example of ING in the Netherlands that is already working to become a digital bank from before the time that was actually a term. They were a phone bank earlier, without actually a big amount of branches. So banks have been moving that way, and I think some banks use incumbents or incubators.
Incubators, yeah.
And try to actually skip out a phase to avoid having to redesign their entire landscape, because it's huge. It's huge.
Yeah, it's a great point. I remember talking with Hugo a couple of months ago about the whole process of getting a fintech and partners to help you out in the fintech world. How can a bank choose partners to do something? And I tried out to come up with a framework to help out everyone, saying, okay, if you want to change the visuals on a small app that doesn't have a lot of impact, you have for the tiki here in the Netherlands, because if it gets a little bit more goofy, nobody takes it that serious. Maybe you can get a smaller fintech and you can do a lab. You can try it out, as Jan is saying, and I do agree completely. You can do a lab. If it works out in the next 6 months, fine. We can keep the fintech. It can be small. If it doesn't work out, well, no huge harm comes to the brand. Things get a little bit different when you talk about core bankings and now, for example, that you feel the pressure to have payments in a reality which is completely different from last year and completely different from 4 months ago. The Internet of Things brought the Internet of Payments. I can pay with a ring, I can pay with my phone, I can pay with probably my face. That was already new, and banks were trying to get there, and it's a huge effort for them. Apple Pay and Google Pay is a huge effort for every bank to try to get it not only to work, but also to be regulated and for clients to be happy, because clients are always asking for more. And now you have the Internet of Payments. I can order stuff from my fridge, and does the bank need to support me on that? So this whole reality, it's completely insane. If you want to try something like Apple Pay in a bank, I'm pretty sure the bank will say, well, okay, we're going to go Apple Pay, but it's not going to work in the next 6 months. What I'm trying to advocate to most of my partners is, if you don't have that go digital, go phygital, if you don't have that mentality that your clients want you to know them, just like a big tech, but your clients also want the same security treatment and experience, just like an ABN AMRO or an ING. And that's hard to get. That's another whole discussion that we've been having in the fintech area, where we as clients are asking and demanding the best of the Amazon to know me, but then the best of the banks to keep my money safe. And that's really hard, because you cannot find that in the market. I cannot just walk in the street and say, hey, Jan, do you know API technology at the same time that you know loans and mortgage, and the same time that you know, for example, regulation, PSD3 rules? You can't find it. And that's actually got a little bit exposed and even pushed these days, because we need those payments. We need that possibility to continue life through machines with the straight through processes. And we can't afford to have banks saying, yeah, but I like to approve things manually, or I like to get people here to show them that I'm the bank manager. That doesn't work these days, and probably that will completely shift. If not, that approach probably die, I would imagine.
Any more questions, comments? We need a strong question to challenge what Bruno just said, right? So why were Revolut so successful, Bruno?
Sorry. Do you want me to jump in with something?
Yeah, Kevin, please. Good to see you, by the way.
Yeah. Sorry, the image wasn't there for a while. I was having tech problems.
Great.
Yeah, a few things have been striking me when Bruno's been talking, and a lot of it is very generalized, and it seems to have a particular view of culture, to go back to Smerty's point. And we're all programmed to think of culture, for example, in terms of nations, that nations have cultures. But then Bruno says, oh, and I was talking to Google the other day. Right. Now we're not in a normal mainstream culture. Now I would argue that culture is going to divide hierarchically and across geographical lines between the credentialed and the uncredentialed, the people who read the Financial Times and the people who read the Sun, people who read the Wall Street Journal and the people who read Breitbart, you know, whatever it is. And so we, when we're in this conversation, are not representative of any broad culture. We're representative of the higher level of that culture. And to give a concrete example, Bruno was saying, oh, I found as a manager, these video tools don't work as well as physical locations because blah, blah, blah. Now, interestingly, a couple of days ago, I sat down and I thought, right, why is Slack not working for me? How does this need to work? What's the workflow need to be in order for me to get the informal advantages of an office environment? And I sat there and I sketched out some UX and thought, yeah, if I had infinite amounts of time and money, I could build a business on that. That'd be really good fun. Set it aside. And at that point, my sister sent me a Zoom invite, except she can't work out how to use Zoom. She sent me a photo from her phone of the Zoom setup screen with the username and the password on it. She's 48 years old, average intelligence, average education. She runs an office of 6 people. She's junior manager, right? And the stuff that I go, oh yeah, that's inadequate for my needs. I want something really complicated. This would be awesome. She goes, I can't use this tool at all. So I wonder if when we're talking about, you know, when we amongst ourselves talk about these things and the potentials and what the client wants, what we're actually doing is we're imagining people to be very similar to ourselves and perhaps only coming up with solutions which are of use to that kind of, if I'm thinking of culture becoming divergent between the credentialed and the uncredentialed,
Absolutely.
we're thinking of solutions for the credentialed. We're thinking of operational mechanisms within companies for the credentialed. But a bank has to span both of those.
Yeah. And Kevin, usually the people coding are of a different age of the people that actually use the program, which is very typical. The people, the product owners that actually create Zoom, I don't know, they have a certain age. The guys coding probably have another age, and at the very end of the line, if you're not able, like you said, if you're not able to go through that mentality, you're gonna have a huge difference, and you feel that, and actually you feel that again, and we go back to to what we have been talking. We go back to the whole approach on how we do this inside the company. If I don't have a broader vision and an open mind on how my core banking system needs to work from a business to business point of view, and also have the same open mind for my end clients, retail clients, and we'll go to number 26, Hugo, on that, then probably I'm giving the wrong indications to my coders, and the code that I'm building, it's an app that is probably okay for me and okay for, as you said, for a certain level of people, but it won't work at all for certain ages, certain geographical points. I'm still from a culture in Portugal where most of my previous generations do not trust the banks, do not trust the government. And every time you talk about having a POS, they're like, why? No. Then they'll know exactly what I do, exactly what I sell. And they're like, okay, but you're just adding more work. And if I can imagine this at a small scale at the very end of the line, I can imagine what happens in other levels. For us professionals, it's just hard to explain that. And that's what I'm trying to explain to most of the colleagues. They are the best in what they do. I'm not. As an innovation officer, as a person that likes innovation, I'm not entitled to actually know the answer. I'm entitled to say, look, there are signs. I see things going this way. I might be completely wrong, but I keep hearing this, and you're the guy in that area. Maybe you can pick it up and tell me if I'm wrong. But look, everyone's talking about smart contracts. Everyone's talking about blockchains. I've been hearing it since 2012. I'm one of the persons that I know that knows blockchains 4 years after it was created. And I don't have Bitcoins yet. I don't buy a single Bitcoin or anything. And I keep telling everyone, well, you can't ignore it. You just can't. It's too late to ignore it. It might not be the answer that you're looking for. It might not be the best technology for what you're looking for, but you might probably want to think about having somebody looking into it. I was telling this week to Hugo, I found a very incumbent traditional bank that was working. The bank industry has 1,000 years, so you can imagine how they were working. It's one of the oldest, and they approached it with some genius guy, some genius technology guy, and they reinvented the whole banking workflows and banking process via smart contracts on a chain. So basically, they automated the bank. 320 processes. I see the majority of the market having workflows and BPM systems. These guys automated the whole thing. These guys said, okay, if you want to open an account in the next 5 minutes or 10 minutes to do the whole negotiation, your account is open. No human. You just open, you deliver the stuff. If all the conditions are met, you're in. And I told the guy, that's genius, but you're like 10 years ahead of your time. Probably nobody buys that. And he actually said, yeah, nobody buys it. Regulators are all happy. This would be amazing for regulators, but nobody buys my product. Because bank managers are like, oh, then what? Then the bank is what, 10 persons, 2 persons? And the guy said, well, actually, you need a dog and a person. The dog to bite the person if he touches the computer, and the person to feed the dog. But just like Boeing says it, but it will run by itself. You just need clients. And that's the world that we live in. And so you're totally right, Kevin. And again, as an innovator, we're just trying to pick up the signs. And even for us, it's hard. If I try to digest the whole COVID-19 webinars and try to get something out of it, it's really hard. But it's nice. It's fun. I'm happy that we do it.
Bruno, you touched in a point, and Hugo, you asked about Revolut. I can talk about Revolut as a consumer on the other end. And in the day that I decided for Revolut or N26, I went to Revolut because the N26 didn't allow me to open the account on that day. So the process was broken, was not working. And
Marta went away. That would be nice for Marta. That's a German.
It was about 4 years ago, and Revolut went through. It went almost immediately. I was surprised 2 days after I had the banking the card in my hands, and and it was so simple. And I think was a simplification of the process they bring. Okay, of course, you touched on a very good point, and I suffered already that problem as an entrepreneur back in Portugal, that I created a product that was too early on the market, and nobody buy, and today is normal. You touched upon maybe they were in the right time with a very simplification, a product that was really simple to acquire, and that was for me was the key point. And they keep simple. They keep doing the things simply in their own way, and that's the point. Many times that the companies invent things and they complicate the things over the process. And Revolut's still simple. So
what I think Revolut did, and to answer you on number 26, Revolut. So number 26 started with the credit cards approach, and they wanted to if from what I know, they tried to get all that negative idea of credit cards, trying to tell people you can have a credit card, it's not going to be a weight on you, and we're going to make it easy for you. You can get cards and it's going to be relaxed, and you're not going to have a huge problem around it. And it was a success. Then you have Revolut with something that I still believe what they did was something that it looks like Columbus egg. So what did we hate about banking? The fact that everything has a fee, the fact that I cannot trust my bank advisor. Every time I call the bank, if I say, hey, how's my bank account going? He will try to sell me something. He will say like, yeah, by the way, do I have another product? You're like, yeah, just go away. I need to transfer money from Abu Dhabi to Portugal. Yeah, you have to pay 25 euros per transaction. Doesn't matter the amount because we need to get some trust. Yeah, guys, but I do give you a huge amount of money throughout the year. I'm one of the best customers. Why can't I just have a Slack one time? Why don't you just cut me some Slack? I'll do it once. I don't bother you again. Just give you the 25 years for free and let it go. And what Revolut did that I really like about it is that they looked into all this, and it's interesting that their communication is actually around this. They did what Apple did, and Jan can testify. I'm not one of the biggest technology fans of Apple, but in marketing, they're God. And Revolut did something like Apple did in that sense. They went to our heart. They said, okay, you want to transfer money? Fine. You pay the interbanking fee. Oh, you're traveling? Okay, then we get you a lounge access. Again, smart connecting with smart partners to provide what Revolut cannot provide. Revolut doesn't know about airport lounges. They probably connected to the best partner to do it. And they give you one QR code for a certain level for you once in a while, which is probably more than enough for the people that want to go for it. Otherwise, if you have enough money, you probably already have traveled so much that you already have access to the launch system. They give you health insurance, but they actually explain what you have in each country where you're there. They actually explain what you get, what you have. They actually communicate with you. So that advisory, that close relationship, that knowing you, that cognitive sense, it's their magic. And what I keep telling everyone, yeah, I see some flaws, their cost base, and I had huge discussions with Jan on this, hours and hours of discussion. Their cost base, it's huge per client. They don't seem to, they always appear not to be doable or workable in the long run, but they're still there, they're still growing up into the sense that either they actually get successful by growing, or then they're going to probably have to go around
they
it.
have the data. And,
oh yeah, but that banks have been sleeping.
is powerful these times.
Absolutely.
And the bank cannot make money from the data, and they can do money from the data. So they will come to a level they know exactly what I'm going to do tomorrow, and they're going to present me that in a gold plate. You see?
Yeah.
Because they know where I spend my money. Even they will come. They know what I order on the restaurant. Everything, because most of the people that I know, they just work with Revolut first.
I keep telling everyone, the day incumbent banks wake up for the amount of data that they have, things will change. I have a Portuguese colleague that just created, Jan, help me out. It was from InnoPay, right? I'm not saying it wrong, from ING.
No, that's
InnoPay.
correct. Yeah.
So he went out of InnoPay to create a fraud and intelligence fintech here in the Netherlands. He, because he had the connections to the bank, he actually got access to, I don't know, a huge number, 700 million or something, number of transactions from ING. Can you imagine the advantage that he has versus any other fintech? Because he can actually try out his model against 700 real transactions, anonymized, but real transactions. That's huge. So if one of these days, the big incumbent banks actually have the time, the effort, or just get there, to get to the point that they actually have the partnership, the solution, the digital means, the cloud means to actually put that data to work, you're absolutely right, Marco. This is going to be a game changer for everyone.
Exciting. So the business model now is about data, in leveraging that data to make money. And by the way, Apple, they also know where we are going to spend our money because we use Apple Pay. Yeah. I use Apple Pay. So yeah, I'm a bit worried, concerned now. All right. We have one idea to share here on how to improve the Innovation Cafe. I'm going to try to spell your name correctly. So Sriti. I think I failed.
Yes, the 3 consonants are quite difficult for every language. So yeah, the idea is basically to do a virtual book club. So similar to these kinds of conversations that we've been having on specific themes, we could basically choose a specific book. We could even vote for it via the channel. And then we can set up a session where we can have like critical debates about the books, because I was just realizing a pain point from my perspective. I've been reading quite a few interesting books. I saw, Hugo, you mentioned Pirate in the Navy in the last conversation. So
Pirates in the Navy.
Pirates in the Navy. So I just got that one, so I will read that one as well. But since I think we are quite similar minded, but we have completely different backgrounds, we might read the same words, but react to it very differently. So I think if we have, we can set up like a monthly conversation and choose a book beforehand, you know, like a democracy. I think it could be an interesting conversation to have. So I just wanted to hear your guys' thoughts. Do you think it could be a good approach? Would there be engagements?
Yeah, I like it. Jan used to be my book advisor, so.
There you go. We've got great book advisors.
Book advisor. Oh God, yeah.
Ugo, just not to lose you on that. You know that I do defend that banks will be, instead of money and fiduciary money, they will be keeping our data as value. And I can expect a future where I say, you need to access my private data. You have to go through my bank, and my bank will keep my data private.
That's disruptive. Because data is the new currency. That's a good one. So we need to invite you in 1 month time to come back here and share your perspective. So next week we are going to have Kevin. Kevin, are you still on the call? Maybe a few spoilers about your speed and G-forces, understanding move fast in 2 dimensions. You are muted.
Okay. Yeah, you give me no warning there at all. Yes, it's just the notion that people talk about speed, but in fact, the forces that operate on people are in 2 dimensions. So if you think of G-forces in terms of comfort with change, rapid movements in direction, etc., that's very different to being comfortable with moving fast. And one of the tools that we use here when we're engaging with client companies is we analyze them on this very simple 2-dimensional matrix, and we look at where different stakeholders are within the organization, and from that gives us a little bit of planning and some insight into how the engagement is likely to progress and how we can communicate and plan the work more effectively with them. So it's like really simple 2-dimensional model that takes 10 minutes to explain, and hopefully is a useful way into anticipating and planning engagements with organizations where there might be a lot of divergence in people's appetites between both speed but also G-forces. And I'll explain that more next week.
All right, very good. Thanks, Kevin. In the week after, we will have Olivia O'Sullivan from New York to talk about the power of external innovation during uncertain times. In the day after, the 28th, Marta from Germany, I think she's not online now. She is going to share with us evaluation and validation of ideas, the simplest way to create innovation addiction in your organization. I'm really curious about this one because I work with big organizations and they all talk about ideas, ideation, and sometimes they only talk about that. Others, they run workshops. Others are trying to evaluate ideas, but it takes years to evaluate one idea, and usually the method is a business case. So I'm really curious about these two presentations. All right, so if you want to join, feel free. And by the way, it's free, so there's no excuse not to participate. And if you
It's
are
a
not
freemium,
in our
right?
Slack, yeah,
To get the certificate, you're gonna ask for money or something.
to get
No,
the
I'm gonna-
certificate, the diploma, yeah. I would like to say thank you to all of you, in particular to Bruno, because
Oh,
I think
thank
he
you also.
spent a few hours preparing this presentation. In the video will be probably online in the upcoming days on YouTube.
Yeah, thank you
Any
to
more
Hugo.
comments? Any more feedback?
Yeah, when are we starting the book club?
There we go.
ASAP, it's virtual, so you just have to get the
Let's
kids.
do it.
Okay, guys, have a great day. Thank you so much for the time.
Cool.
Thank you
Thanks,
all
everybody.
for the
Bye-bye.
Thank
discussion.
you all. Bye bye. See you
Bye-bye.
next time.
Bye-bye.
Bye bye.